This is another podcast from Alpha Business Media. Welcome to the Deep Dive. Today, we're diving deep into the fascinating, sometimes complicated, world of investing in Nepal's hotel sector. We've gone through a whole stack of source materials you shared, detailed analyses, reports, various notes, and we're here to unpack what they tell us. We're looking at opportunities, the risks, and maybe even uncovering some hidden gems for building hotels, maybe even glamping sites in Nepal specifically between 2025 and 2027. Think of this as your shortcut, your essential guide to understanding this dynamic market right now.
Absolutely. Nepal's tourism scene is, well, it's definitely bouncing back. And this source material gives us a really granular look. It's not just headlines. It gets into the nitty-gritty, the challenges people face on the ground, the rules and regulations, and importantly, where those perhaps less obvious but really interesting opportunities might lie for investors over the next couple of years. We're going to walk through the key data, look hard at the hurdles, size up the potential returns, and definitely shine a light on those intriguing blank spots the analysis flags.
Okay, let's crack open the source material then. What's the main story it's telling us about Nepal's tourism and hotel investment landscape right now?
Well, the clearest narrative jumping right out is one of pretty robust recovery. I mean, after the big hit from the pandemic, Nepal's tourism sector is showing some really impressive signs of life.
And the numbers in the source material really back that up, don't they? What specific figures stood out to you?
They absolutely do. The source points to 1.147 million international tourist arrivals in 2024. Now, that's significant because it brings them back to 96% of where they were before the pandemic. And it's a solid 13.1% increase just from 2023. So, it's not just a little blip. The data confirms a clear, steady upward trend.
And reading through the sources, it's clear tourism isn't just part of Nepal's economy. It's presented as really fundamental.
It's difficult to overstate its importance, according to these documents. Traditionally, it's been Nepal's biggest industry, a major source of foreign currency. We're talking around $471 million a year. And while its direct GDP contribution is maybe around 8% currently, which is down a bit, but recovering the hotel sector itself is highlighted as the second largest source of that foreign exchange. That's quite something.
And beyond the pure economics, the source also touches on the wider social impact, doesn't it?
Yes, definitely. It's framed as crucial for things like poverty reduction, promoting social equality. The documents mention the hotel sector directly creating something like 1 million jobs across the country. That's a huge footprint.
And looking ahead, the government seems to have some pretty ambitious goals to scale this up even further.
They certainly do. Their updated tourism decade plan, which runs from 2025 to 2034, sets a target of hitting 5 million international tourists annually by the end of that period. That's more than 4 times the current levels. So it signals a very strong long-term vision for growth.
Wow, 5 million. That's a massive target. But the source material is quick to throw in some pretty important warnings, suggesting it might not be a smooth ride.
Exactly. This analysis isn't just rose-tinted glasses. It explicitly flags some major hurdles. Things like persistent infrastructure problems, real operational challenges on the ground, and frankly, the ongoing reality of political instability. And these aren't presented as minor footnotes. They're framed as fundamental factors that you, as a potential investor, absolutely have to analyze carefully alongside those bright growth prospects.
Okay, let's dig into those tourist numbers and trends a bit more then. You mentioned the growth from 23 to 24. What else do the arrival dynamics tell us?
Well, looking year over year, that jumped from about 1.014 million in 2023 to the 1.147 million in 2024. It really solidifies that 13.1% growth rate. It confirms the recovery isn't stalling, It's still got momentum.
And where are these visitors coming from mainly? Are the sources showing any interesting shifts in the key markets?
Yeah, the top source countries for 2024 were India, leading the pack with around 317,000 arrivals. Then you have the USA with about 111,000 and China with just over 101,000. Now, what's interesting here is that while India is still number one, the source notes a slight dip in numbers from India compared to before, but arrivals from China, they saw a really impressive jump, a 67.3% increase. That's huge. The UK, Bangladesh, Australia, they're also sending significant numbers.
Okay, now here's something the source highlights that feels really critical if you're thinking about hotel economics. Changes in how travelers behave, specifically length of stay and how much they're spending.
Oh, absolutely critical. The data shows the average length of stay was sitting around 13.1 days in the 2022-23 period. That's actually a bit lower than the 15-plus days seen right after the pandemic restrictions eased. But maybe even more significantly, the average spend per tourist per day. Well, it dropped from $65 back in 2020 down to just $41 in 2023.
Wow, $65 down to $41. That's quite a drop in daily spending. What does the source suggest this signals for investors looking at, well, profitability?
That change is a really key indicator. It suggests potentially a shift in the market mix. Maybe the recovery is attracting a larger volume of travelers who are perhaps more budget conscious, or maybe people are just opting for shorter trips overall. Either way, it really impacts how you think about pricing, your hotel concept, and assessing profitability. This shift could actually boost the appeal of certain formats, like quality glamping or modern, well-run hostels that offer good value and maybe a unique experience. And the sources also stress, don't forget domestic tourism. It's vital, supporting the accommodation sector and pushing demand into new areas too. The table in the source showing the annual data from 2019 right through to 2024 really helps put these trends into perspective.
So beyond the overall numbers, the source also breaks down the different types of tourism Nepal offers, right? It's not a one-size-fits-all destination.
Exactly. You've got several distinct segments. There's the world-famous trekking and mountaineering, think Everest, Annapurna, Langtang, Manaslu. Adventure, including climbing, drew about 10% of tourists in 2022. Then there's a very significant cultural and religious tourism segment. People drawn to the Kathmandu Valley, Lumbini, various monasteries. That accounted for almost 13% of visits in 2022. The sources even mention potential in Humla, near the route to Mount Kailash, for pilgrims. You also have adventure sports rafting, paragliding, especially around Pokhara, bungee jumping, biking, and of course, ecotourism and nature-based travel, focusing on the big national parks like Chitwan, Bardia, Sagarmatha. I mean, nearly 20% of Nepal is protected land, so that's a huge asset.
Okay, quite a diverse offering then. How does the bigger economic picture presented in the source align with this tourism recovery story?
Well, the analysis cites the World Bank's forecast. They project Nepal's economy to grow by 3.3% in this fiscal year, FY 2024. And then, importantly, they see it accelerating to an average of 5% growth in FY 2025 and 26. And this growth is expected to be heavily driven by the services sector, with tourism revival explicitly called out as a key factor. The accommodation and food sector is really expected to get a significant boost.
And that economic optimism seems kind of reflected in the amount of new hotel building mentioned in the source, too.
It certainly seems so. The source points out there are currently more than 20 new five-star hotels actually under construction. That's adding quite significantly to the 16 that already exist. It suggests pretty strong investor confidence, particularly at the higher end, anticipating that future demand growth.
So the government is clearly trying to bolster this growth with specific plans and initiatives for tourism.
That's right. Beyond that big 5 million tourist target in the Tourism Decade Plan, the source mentions efforts to promote new, maybe less visited destinations, and also crucial infrastructure improvements, specifically highlighting airport development, looking at TIA in Kathmandu, but also the newer international airports at Bardahawa, GBIA, and Pokhara.
But, and this feels like a recurring but in the source material, there's a pointed analysis about the gap between these plans and the actual reality on the ground.
Yes, and this is such a vital takeaway for potential investors. The World Bank, cited in the documents, specifically points to slow progress on infrastructure development and ongoing regulatory headaches. The Hotel Association of Nepal, HAN, echoes this too. They mention outdated laws and, frankly, not enough practical government support actually materializing. The source gives a concrete example. Budget allocated for developing tourism in specific zones, like around Rara Lake, often just sits there, unused. It really highlights execution challenges.
So the key insight here for you, the listener, if you're considering putting money into Nepal.
The analysis strongly advises, well, a healthy dose of realism. Don't just take government announcements or budget plans at face value. It's absolutely essential to do your own thorough feasibility studies. And those studies need to explicitly account for potential delays, bureaucratic hurdles, and the implementation challenges you might face dealing with the state machinery.
Right. Let's shift gear then to the practicalities of investing, the regulations, the climate for investment. The government says it wants foreign investment.
It does state that commitment, and the source details the framework. They have taken steps to try and simplify procedures. Importantly, 100% foreign ownership is allowed in most sectors, which is a big plus. The key law governing this is FITA 2019, the Foreign Investment and Transfer of Technology Act, and that guarantees investors can take their profits and dividends out of the country.
And are there specific carrots, incentives to attract foreign money, especially for tourism projects?
Yes, there are several layers of incentives mentioned. For larger investments, specifically over 100 million Nepali rupees, that's roughly 750,000 US cent, there's potential for visa fee exemptions. More generally, there are tax holidays and other benefits tied to specific industries or investments in certain less developed regions or just projects over a certain size. The Special Economic Zones, or SEZs, offer particularly attractive terms, things like full profit tax exemption for 5, maybe even 10 years, then partial exemption after that, plus breaks on dividend tax, VAT, and customs duties. For tourism specifically, the source mentions things like significant tax exemptions for international airlines investing over MPR 2 billion. And also, if companies in agriculture or tourism reinvest their profits back into expanding their business, they're exempt from dividend distribution tax on that reinvested amount.
Okay, so legally, it sounds quite supportive on paper. What about the actual process of registering an investment? How straightforward is it likely to be?
Well, the source lays out a multi-step process, although it acknowledges efforts to streamline it. It usually starts with getting approval from the Department of Industry, the DUI. Ideally, this is done via their online portal, the One-Stop Service Center, or OSSC. Once you have that DUI nod, you then need to register the actual company with the Office of the Company Registrar, OCR. Then get your tax numbers, PAN and VAT. And finally, you need approval from the central bank, Nepal Rashtra Bank, NRB, for bringing the capital into the country.
And what's the official time frame supposed to be for all that?
The source mentions the stated target is 30 to 45 working days if all your paperwork is absolutely complete and correct. It even gives estimates for each stage. DUI approval around 7-10 days, OCR registration 3 to 5 days, and then NRB approval another 7-10 days.
There's that nuance again from the source about the single window concept, isn't there? Suggesting it might not be quite so single.
Yes, this is a really crucial practical point the analysis highlights, that OSSC, the single window, might function more like a coordination hub. It doesn't necessarily eliminate the need for you to actually interact with and get specific approvals from multiple different government departments. So what this means for you is, while those timeframes are stated, navigating the bureaucracy still requires really careful preparation, meticulous documents, and frankly, probably engaging experienced local advisors, lawyers, or consultants, which the source does recommend to help manage the process smoothly and minimize those potential delays or roadblocks.
Got it. What about minimum investment levels? And are there sectors completely off limits to foreign investors in Nepal?
Yes, there is a minimum threshold for foreign direct investment, or FDI. It's set at 20 million Nepali rupees, which is about 150,000 US dollars. Though interestingly, this minimum doesn't apply to the IT sector. And yes, there is a list of restricted or prohibited sectors. Generally, it covers things like basic cottage industries, certain very local personal services, weapons manufacturing, direct real estate trading, although constructing property for sale or rent is allowed. Also retail trade, certain types of farming, some consulting services are restricted. But importantly for this discussion, the source confirms that constructing and managing hotels is explicitly permitted for foreign investors.
Okay, so hotels are generally open for FDI, but navigating the process requires care. Let's move on to risk. The source dedicates significant space to this. Despite the opportunities, what are the major potential pitfalls highlighted for hotel investors?
The source is really thorough here, and it's essential reading. First up are macroeconomic and political risks. While the GDP outlook is positive, the analysis notes potential high inflation could hurt both tourist spending and your operating costs. But the biggest systemic risk flagged, repeatedly, is political instability. Frequent government changes often mean policy inconsistency, which really discourages long-term investment planning. The source specifically points to instability back in 2023 and broader concerns about rule of law issues like political influence on investigations. HAN, the Hotel Association, also flags this as a major challenge. The practical impact for you: project delays, higher transaction costs. The analysis suggests investors should factor this in, maybe aim for shorter payback periods or build in flexible exit strategies. Corruption and weak law enforcement are also mentioned as risks to be aware of. Second, infrastructure risks. This is a huge one, mentioned again and again as a major obstacle. Transport is key. Poor roads, lack of competition make getting around slow and costly. Airports remain an issue. TIA in Kathmandu is stretched thin, while those new international airports in Pahawa and Pokhara are, frankly, underutilized due to various factors, limiting how many tourists can actually fly in easily and keeping air travel costs high. Aviation safety concerns also keep Nepal on the EU air safety blacklist, which doesn't help perception. And outside the main cities, reliable power and communications can be inconsistent. The fact that the World Bank recently approved $150 million just to improve bridge resilience kind of indirectly highlights the existing problems and vulnerability to natural disasters. Third, market risks. The source points out that HAN was raising concerns about potential oversupply way back in 2017. Right now, the overall occupancy rate is only about one-third of the total available beds. Think 3.5 million beds versus just over 1 million tourists annually. Naturally, this fuels intense price wars and pushes profitability below break-even for many hotels. And that large number of new five-star hotels coming online, that's likely to make things even tougher, especially in the Kathmandu high-end market. Plus, you've got the rise of unregulated options like Airbnb and informal homestays, creating what the source calls unfair competition and siphoning off guests. Fourth, operational risks are pretty significant too. A major headache highlighted is the brain-drained skilled hospitality staff leaving Nepal for jobs abroad. This creates shortages, especially for middle and senior managers, and leads to high staff turnover. Restrictive labor laws are also mentioned, making hiring and firing less flexible than some investors might like. And personnel costs can be really high, potentially up to 40% of revenue, the source says, which is way above the international norm of 10–15%. Then there's seismic activity. Nepal is in an active earthquake zone. The building code, NBC 105.2019, mandates seismic-resistant design, which adds cost but is absolutely vital. Natural disasters like monsoon floods and landslides can also severely disrupt travel and infrastructure. And while generally safe for tourists, petty crime in crowded areas is something to be aware of operationally. Finally, regulatory and legal risks. The main tourism law itself dates back in 1978, clearly outdated. Bureaucratic hurdles. A sense that the hotel sector isn't truly prioritized by the government. It can make sorting out interdepartmental issues quite difficult. Taxation is another sore point mentioned. Hotels face a higher corporate tax rate, 25 for Fed is 20% for most, and don't get electricity subsidies like some other industries, adding to operating costs.
Wow, that's quite a comprehensive list of challenges from the highest political level right down to day-to-day operations. So, given all that, how does the source material assess the potential for return on investment? What kind of financial picture does it paint when you weigh everything?
Well, looking at ROI means looking at performance and costs. The sources point to public data showing some large listed hotels like Solti. Radisson did show significant recovery in 2020-23. So the top end seems to be doing better. However, HN's overall picture, with that low one-third occupancy, points to widespread price wars and struggles for many across the sector. And that lower average daily spend per tourist, just $41, definitely impacts the revenue you can generate per guest.
That sounds like, well, like a two-speed market almost. Does the source suggest what's driving that difference?
It absolutely points towards a two-tier market. The big branded hotels probably have better marketing muscle, stronger distribution networks, maybe more resilience, so they're performing better. Meanwhile, many smaller independent places are likely struggling with low occupancy and intense price pressure from all sides. And that wave of new five-star hotels coming, that's only going to intensify competition at the top end. The source implies you really need a clear strategy to compete: strong branding, smart online distribution, maybe even considering joining an international chain for reach. When you look at neighbors like India, with much higher occupancy around 66% and higher average rates, or even cities like Seoul hitting record rates, it shows the potential for Nepal if occupancy and spending improve. Attracting more high-spending visitors or developing the MIC meetings and conferences market is key.
Okay, let's talk costs. Does the source give any hard numbers for construction?
It provides some estimates, yeah, though they vary a bit. One figure suggests a new upscale 260-room five-star in Kathmandu could cost around 4 billion Nepali rupees, that's roughly 30 million US, or about $115,000 per room. Building something like that might take 3.5 to 4 years, with cost maybe around $17,000 per square foot sited in one place. But then another source gives a much lower estimate, $5 million, for a 100-room hotel in Kathmandu, so $50,000 per room. That likely represents a different hotel class, or maybe excludes certain development costs. And on the operating side, remember, those high-potential staff cost up to 40% of revenue, as mentioned. The source material does include a useful table that tries to summarize approximate capital and operating expense structures for different types, like 5-star, 3-star hotels, and even glamping, which gives you a better comparative feel.
So considering those costs and the competitive environment, what factors does the source consistently highlight as being absolutely critical for actually making a profit and succeeding?
Several things come up repeatedly. Location, 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 yes. But it's not just about being near attractions. It's about connectivity, transport, and offering something unique about the location itself. A clear, compelling, unique selling proposition, or USP, is vital. It's stunning design, a deep commitment to sustainability, authentic cultural experiences, specialized services like top-tier wellness. You need something that stands out. Quality of service and really effective people management are critical, especially with that brain drain issue. Investing in training, motivating, and retaining good staff is presented as essential. Strong marketing and distribution are non-negotiable. You need a smart strategy, leveraging online channels effectively, working with travel agencies, building a brand people recognize, and increasingly integrating genuine sustainable practices. It's not just good for the planet. It can cut costs and definitely appeals to a growing number of travelers who care about responsible tourism.
And thinking longer term, beyond just the next few years, what's the source's take on the overall prospects for Nepal's hospitality sector?
Well, long-term success is seen as heavily dependent on a few big ifs. If Nepal can actually achieve that ambitious 5 million tourist goal, if there are significant real improvements in infrastructure, and if the country can maintain greater political stability. If those happen, there's clear potential for growth in key metrics like revenue per available room, driven by better occupancy, and hopefully attracting tourists who spend a bit more, perhaps through growth in MyC or luxury travel.
Okay, this brings us to what feels like one of the most exciting parts of the source material, this concept of blank spots. These are areas or niches identified as having untapped potential, especially for this 2025-2027 window.
Yes, this is where the analysis really tries to look ahead. The source suggests this specific 2025-2027 period is quite favorable for projects focused on delivering unique experiences and exploring alternative types of accommodation. Interestingly, even in the established hubs like Kathmandu and Pokhara, which might feel saturated, the analysis still sees niches. Think high-concept boutique hotels, dedicated wellness retreats focusing on yoga, meditation, or Ayurveda, or maybe hotels specifically designed to capture the MIC market.
But the real excitement seems to be around the less developed regions, right? Western Nepal gets quite a bit of attention in source.
It really does. Western Nepal, especially Karnali Province, is presented as having just huge, unrealized potential. Rara Lake, for example, stunningly beautiful, described as ideal for ecotourism, trekking, wellness. But it suffers from major infrastructure deficits. Terrible roads, limited flights, not enough quality accommodation, and that issue of development budgets going unused. The analysis sees a clear need for things like eco-lodges and glamping there. Homla District is another fascinating spot flagged. It's a traditional gateway for pilgrims heading towards Mount Kailash and Lake Manasarovar, especially from India. It's rich in Tibetan culture, ancient monasteries, meditation caves. Development there would need to be incredibly sensitive and sustainable, really respecting the local heritage. And Bardia National Park is highlighted for its growing ecotourism draw, especially for wildlife tigers, rhinos. There's increasing demand for comfortable lodging like lodges or glamping, building on the homestays already developing there. The source does acknowledge that classic chicken and egg problem in these remote areas, though. Investors shy away because of poor infrastructure. But infrastructure doesn't improve much without investment and tourist demand. Potential solutions suggested include attracting large anchor investors to kickstart development, more targeted government support for basic infrastructure, or focusing on projects that need less initial capital like glamping. Public-private partnerships are also seen as really key. And it's not just Western Nepal. Other promising areas mentioned include locations around the popular parks Annapurna, Sagarmatha, Everest, Lantang. As trekkers increasingly look for more comfort, there's a growing demand for eco-lodges and glamping that go beyond the traditional basic tea houses. Then you have the less explored trekking regions, Manaslu, Sum Valley, Kanchenjunga, Dolpo, Mustang. These offer really unique, often exclusive adventures, sometimes requiring expensive permits like Upper Mustang's $500 for 10 days. This attracts a wealthier type of tourist where high-quality glamping or small lodges would be very relevant. Even areas along rivers popular for rafting or kayaking are seen as suitable for glamping, campsites, or combined tour operations.
Glamping comes up again and again. The source seems to really emphasize this as a strong growing opportunity, especially in those unique, maybe remote locations.
It's definitely identified as a major trend with significant legs in Nepal. Glamping hits that sweet spot, combining the appeal of being close to nature and authentic experiences with modern comfort. A big advantage is usually lower upfront investment, lower capex, and a faster build time compared to a traditional hotel. It also offers much more flexibility in choosing locations. You can put it in really remote, picturesque spots. The target audience is broad too: younger travelers, families, people looking for privacy or unique experiences, and especially the growing number of eco-conscious tourists. Ideal spots are those remote natural areas, national parks, by lakes or rivers near trek starting points. The source does remind us to consider seasonality. The peak trekking seasons, Octonav, Mar Apar, are obviously key for planning.
And what about that broader global trend towards ecotourism, wellness, sustainability? How does Nepal fit into that, according to the source?
Nepal's almost perfectly positioned for this, given its incredible natural assets and deep spiritual heritage. The source doesn't just talk theory, it highlights real, successful examples on the ground. Tiger Mountain Pokhara Lodge is held up as a model. They focus on what they call the 4 Cs: conservation, community, culture, and commerce. They're deeply involved in conservation and prove that responsible business can be profitable. Another example is the Pavilion's Himalayas The Farm, an eco-luxury resort using renewable energy, organic farming, and crucially, reinvesting profits into social projects via their nonprofit. Their whole business philosophy is based on work, wealth, and wisdom. So the key insight from these examples in the source is that successful eco-projects in Nepal aren't just about greenwashing. They are deeply integrated with their environment and community. They require real commitment, a long-term vision. Maybe not the best fit for investors looking for a quick flip, but they create incredibly unique, high-value products that attract a very specific, often loyal type of traveler. The source even includes a detailed matrix table summarizing many of these blank spot opportunities, outlining locations, suitable project types, target audiences, advantages, and importantly, the challenges for each.
Okay, so for you, the listener, taking in all this detailed analysis, the opportunities, the significant risks, what practical advice does the source offer for actually navigating this complex market successfully?
Section 4.5 of the analysis provides some really concrete recommendations. First, do meticulous research and pick your niche carefully. Don't just ride the wave of general tourism growth. Really assess the specific demand, competition, and your own resources for the location and segment you're targeting. Second, adapt thoroughly to local conditions. Your project needs to fit the landscape, the culture. Critically, follow the building codes rigorously, especially the mandatory seismic design standards, NBC 105.201 line, and make sure you hire reputable local professionals who know the context. Third, make sustainability and responsible tourism core to your project. It's almost expected now, especially in Nepal, and it resonates strongly with target travelers. Integrate environmental protection, social responsibility, support local communities, help preserve heritage. It's the right thing to do and good business. Fourth, develop a robust, flexible, long-term strategy. You have to plan for market ups and downs, potential political instability, shifting tourist tastes. Resilience is absolutely key. Fifth, use trusted local partners. This seems critical for navigating the bureaucracy, getting local insights, building community relationships, and managing operations effectively day to day. The source specifically suggests using licensed local audit and consulting firms. Sixth, implement strong risk management from day one. Identify all those potential risks we've discussed: infrastructure bottlenecks, operational issues, political shifts, natural disasters, and develop clear mitigation plans. For remote projects, this might mean planning for backup power or alternative supply logistics. Seventh, focus relentlessly on innovation and differentiation. In such a competitive market, your product absolutely has to stand out. Whether it's through unique design, exceptional service, a different hospitality approach, you need an edge. And finally, a point that's really emphasized: don't underestimate the investment needed in soft infrastructure and human capital. Finding, training, motivating, and retaining high-quality staff is crucial, especially with that brain drain challenge. Budget seriously for this. The success stories like Tiger Mountain Lodge show the immense value of a stable, well-trained team. This investment in people is arguably just as important as the money you spend on bricks and mortar.
So wrapping this all up, this deep dive into the source material really paints a picture of Nepal's hospitality sector as one that's clearly recovering, offering some genuinely exciting growth prospects, especially if you look towards those specialized niches: ecotourism, glamping, wellness, and particularly in developing those currently untapped regions. The positive trend in tourist numbers and the government's stated focus do provide a favorable tailwind.
That's right. But, and it's a crucial, but running through all the sources, this optimism has to be balanced with a very clear-eyed view of the significant hurdles that still need tackling. Things like the ongoing political instability, the very real infrastructure limits, intense competition in certain market segments, and those difficult operational challenges around staffing and regulation. Success demands a really well-thought-out plan and a readiness to navigate these complexities.
And that specific 2025-2027 period that the source focuses on, it comes across as a really dynamic window, one where you can expect rising demand, yes, but also facing increased competition as all that new hotel supply comes online.
Precisely. The analysis strongly suggests that success during this particular timeframe will likely belong to those investors who can create and deliver something truly unique, high quality, and genuinely sustainable. a product that's thoughtfully adapted to Nepal's specific context and culture, and one that effectively meets the evolving needs and expectations of today's travelers. Look, despite all the challenges we've discussed, Nepal remains an incredibly compelling, attractive destination with just enormous untapped potential. The source materials, taken together, strongly suggest that smart strategic investments made with a full understanding of the risks, but also with a long-term vision, can indeed yield significant returns for those who are prepared to work hard, be adaptable, and explore new possibilities.
So you see, this deep dive into the source material reveals a market that is absolutely brimming with potential, but one that undeniably requires a very clear-eyed view of some pretty significant challenges. It's definitely not a straightforward investment picture.
Exactly. The data clearly shows the recovery. It shows ambitious government targets, but it also shines a harsh light on those real-world, ground-level hurdles: infrastructure, political stability, the absolute need for smart, nimble operational strategies. The brightest opportunities, it seems, lie in those less explored niches, those developing regions, but actually getting there and making it work requires overcoming some pretty fundamental barriers first.
And here's what makes this really fascinating based on the source material. You have this picture of a country aiming incredibly high for sheer tourist volume and economic impact, while simultaneously grappling with significant ground-level implementation issues and possessing this absolutely breathtaking, often untouched, natural and cultural beauty that just screams out for sustainable, unique, high-value experiences.
Which really raises a crucial question for you, the listener, to ponder after digging into these sources with us. How can Nepal effectively balance that powerful drive for boosting tourist numbers, for volume, with the absolutely critical need to develop sustainably, to protect its unique culture and fragile environment, and to ensure the benefits of tourism are shared widely, especially in those promising but vulnerable blank spot regions? Is the future path for Nepal's hospitality ultimately about maximizing volume? Or is it about cultivating exceptional value and deep authenticity?
A lot to think about indeed. That brings us to the end of this deep dive. We hope this exploration of the source material has given you a much clearer, more nuanced picture of the complex but undeniably fascinating investment landscape in Nepal's hotel sector. Until next time.